Hi, hope you're having an amazing day wherever you are. Today, there are 6 very interesting crypto related news that I want to share with you, right? Or news or interesting happenings. So yeah, let's just dive into it very quickly. So first up, right, we have Suju is a Twitter user who actually highlighted the news that Ant Financial, of course, is the financial arm of Alibaba Group, where they are removing a cap, right, of a 15,000 limit on individual investments in their fund called Tianhong. Yeah. So what is interesting is that the total AUM, despite falling 22% recently, it still stands at 168 billion. It is huge, right? This is much even larger than the JP Morgan US Government Money Market Fund. But what is interesting is that just based on the AUM of 168 billion and investment cap of 15,000 per individual, so you're looking at potentially 11 million investors in the Tianhong fund of this offered by Ant Financial. Yeah. So now, given that is 11 million people, and if every one of them buy just 0.1 unit of Bitcoin, right, then potentially there is an increased demand of 1 million unit of Bitcoin. So as a buy wall. So what it means, and to me that this is very fascinating, is that they in China, because of the sheer size of the population, right, there are just too many people, and a lot of them have a lot of wealth, and if each of them just invested $500 at current price, right, which to buy with 0.1 unit of Bitcoin, that means there's increase of 1 million units of Bitcoin. That is really huge, right? So to me, this just shows that, right, of course, this is just a potential hypothesis, right? Some of them may have already invested in Bitcoin, right? Who knows? But in any case, it just shows that even in the world today, we are seeing we are still very, very early days. A lot of investors, a lot of people in the world still do not have crypto investments. Many of them don't even know about crypto, or even if they know or heard about Bitcoin, they don't even care to find out more, right? So we are in that early stage. So if you are one of those people who have some knowledge, or if you have some knowledge and then you have convinced yourself that it is wise to actually invest just a bit of your money into crypto and especially Bitcoin, then you are definitely among the, early few, right? You're definitely among the elite few who have this. And yeah, and to me, of course, that is considered a privilege, right? Yeah, let's just move on. Next, so Malcolm Demiras again is another respected individual in the crypto space. So in a podcast that she was interviewed, she highlighted the point that they are basically, because of the forking of major cryptocurrencies, it's actually very confusing to new people. And because of the recent rally, it will have attracted a lot of new people to come into this space again. Either they are returnees, right? People who are returning, or they are completely new, right? And if you look at this 4 logo, if you look at the screen, if you have a chance, of course, if you're driving, do not look. But if you have a chance to look, right, you can see, and if you're completely newbie, just by looking at this kind of logo can completely throw you off, because honestly, they are very, very similar in terms of color, in terms of, shapes, in terms of, yeah, it is just very similar. And how do you know which one are the accurate ones, right? And just if you are new to this space, just forking is basically because cryptocurrencies are open source codes, right? That then the reason why it's open source codes is because it is to encourage innovation, to encourage people to contribute. But this open source code has also led to disagreement among developers, right? Who then, because they want to have they see that a different element is required to scale up the solution, then they have actually branched out. So a different team of developers have actually taken original source code, and they have basically, fork. It means like a separate, they've taken original source codes up to a certain point, and then from that point onwards, they have actually do their own codes, right? And that is why you see here the difference. So something you hear, Bitcoin, of course, is the largest in terms of market cap, and also the first cryptocurrency. And then because of that, you have also then the first fork is actually Bitcoin Cash, and For Ethereum as well, you have Ethereum Classic as an example. Of course, for Bitcoin, there are not only Bitcoin Cash, there are so many other more, Bitcoin Gold, Bitcoin Diamond, and so forth, right? So now if you are newbies, which one do you consider as new, right? So the thing is this, if you are completely new, definitely check out coinmarketcap.com, which is the website link I have given here, right? And here you can definitely see that it is arranged, or it is ranked by market capitalization. And normally, right, the first 10, the top 10 or the top 20 are definitely the more reputable ones, yeah? And you can see here, they are the name, they are the logo, which then, that will clearly tell you. And then there's also the price per unit of the cryptocurrency. And so this, you will not be mistaken, right? You will not be confused. Yeah, so this is just one good resource. There are many others, right? But yeah, this is, if you're new, definitely check out this website. And if you click on each of this, then you can definitely get out more details as in which are the exchanges that you can buy them, right? So yeah, so this is again for people who are very new, and just make sure that you check out this website, yeah? And why are people forking? So just for example, let me just talk quickly about the Bitcoin and Bitcoin Cash forks, right? Way back in 2017. So a lot of gripes, a lot of objections, or a lot of complaints about Bitcoin was that it is not fast enough as a settlement solution, because it takes about every 10 minutes to actually settle. Basically, the transfer of funds is complete within 10 minutes, right? Whereas you have other chain which is not using the similar verification method or consensus achieving method, they can achieve the settlement in much faster, even some of them within seconds, right? But there are pros and cons to this, because Bitcoin, why is it so slow, is because it takes a mining process. It actually uses computing power, very expensive computing power, right, of miners or people who have the computers. They actually uses their computing powers to ensure the validation of all the transactions are correct before they actually want to settle, right? And Bitcoin Cash actually want to solve the problem of speeding up the settlement time, speeding up the transaction time, right? And the way that it proposed to solve it is by having bigger blocks. But the problem with bigger blocks is that you will only give that means with bigger blocks, that means you will need very strong or much higher computing powers to be able to participate as a validator, as someone to check the the transaction, check the mathematic formulas, right, to make sure everything is correct before you can say, okay, validated, the transaction can go through. So because of that, majority of the original Bitcoin developers do not agree to such method, because they think that it needs to be very easy for anyone who has a simple computer to be able to mine Bitcoin, to be able to validate the transactions. Hence, there was a disagreement, and then there is a split of the community. So 20% of the people went on to develop Bitcoin Cash, and then 80% of the developers in Bitcoin Original stayed on with the Bitcoin protocol or the Bitcoin project, right, so-called. So that is why then the split. But of course, to this day, Bitcoin is still the number one, right? And it's also the longest block. That means their record is the biggest to date. And when you have the biggest record, it is very, very hard to temper, to edit, to make correction in all the earliest records. So that is why Bitcoin is still considered the number one in terms of the strongest, in terms of its track record, right? And a lot of people have been trying to hack Bitcoin, and to date, which is more than 10 years history, it still has not succeeded. And Bitcoin really is number one strength is because it is the first, and because of that, it has the longest history, and also because of that, it has proven to be the strongest. And that is something no other coins, right, can claim is right. It's basically because just of the time history, that's how it is. No one else can claim that differentiation. Yeah. Okay. So in relation to that piece of interesting development, there is also a survey done in Twitter, right, where it is hugely very, very popular. More than 10,000 people actually responded, and it's very interesting to the question that how much of your portfolio is in altcoins. Altcoins is basically stands for alternative coins. It's just any other coins apart from Bitcoin. And he's basically asking, Don Alt is the person who initiated this poll, that asking how much of your portfolio is in altcoins, and 47%, almost half of the people said 60 to 100% of their portfolio, of crypto portfolio, is in alternative coins. And that itself is very, very worrying, because and of course there are well, here it doesn't go on to say which are the altcoins that they have invested in. If you are invested in, let's say, the top 20 or even the top 10 altcoins, you are still relatively fine, right? But if you are invested in really the smallest coins, because you really want the super high if you want super high asymmetric risk reward returns, right? Because the smallest coins, some of them like really, really much lower than 1 cent. So whenever the Bitcoin rally happens, it will also have a positive spillover effect to the other altcoins. And that's why if something is so cheap that below 1 cent, you can also buy in at with standard investments, let's say of $100, you can definitely get more of those, and then the chances of you getting a returns is much higher. That's why a lot of people are attracted to the very, very small altcoins. But of course, because of that, it is also a much higher risk. Remember, right? Cryptocurrency is still a very, very risky investment, though. And that is why the best practice is really just to invest 1 to 2% of your total investments. That includes your total investments, right? Your equity, your cash, your bonds, everything else, your property, and just 1 to 2% of those into crypto. And then of those, how do you allocate among the cryptocurrency? But the best practice is really, especially if you're new, do not, and especially if you have not done a lot of research, the safe way is actually just to put into maybe the top 5 to top 7 coins enough, because those are the coins that really have been endorsed by a lot of major crypto exchanges. So for example, like Nasdaq or BAX, right? What are the coins that they say they are going to list? What are the coins that they're going to offer to list on their crypto exchange? Those are the coins that you should, consider or regard as super safe. The rest is really, really taking a more high risk, and definitely, very, very close to gambling already. And that is worrying. I mean, a lot of people are attracted to this space because of the returns, but at the same time, it is not meant to be a gamble. It is meant for you to truly understand it first, right? What's the merits of crypto? What's the merit of Bitcoin versus some other smaller coins, right? And then put in your money accordingly. And this kind of results where a lot of people have 100% of their holdings in altcoins is super, super worrying, because, ultimately a lot of this altcoins will die. Basically, some of it could be scams, or some of it's just that the founders or the project developers are just not sustained enough. They are just not in it in the long term to actually, in the interest of the investors. So because of that, it is very worrying, right? And I mean, for example, if you look at Fidelity, the Wall Street firm, right, that actually offered crypto custody, that they are now already only offered custody for Bitcoin. Even for Ethereum, they haven't yet offered the custody, because they are aware that, some major upgrade is going to come sometime along this year. They want to make sure that, everything is okay, everything is going smoothly as they promised first, before they actually offer a custody of that asset. So that ought to tell you, even institutions are very, very careful. As an investor, you really need to be careful. Of course, I understand you want to get that, you're willing to part with the risk, but still, there is a time when you need to be very careful about taking how much risk, right? Because that is actually why a lot of people are burnt following the early 2018 peak and then crash, and then now we are still in that, very much still in that winter. And now, although it's a little bit rally, but it could very much go down again. No one knows, right? But so if it's people like this who, because of their not enough awareness or enough knowledge, and then they go in, dare I say, blindly a bit, and then that's when they are burnt, and then they are totally afraid to go in ever again, right? So I hope if you are one of them, do not just really get yourself educated. There are a lot of free resources nowadays, right? Binance Academy is one of the free resources out there that talk about age merit. They talk a lot about good coins as well. So do check out them, right? And of course, do a check on Backed. Which are the coins that they plan to list, which are the futures that they are planning to list. Backed is only said that they are going to list Bitcoin futures, yeah. And look at ArisX, do just a Google search on ArisX, which are the coins that they plan to list on their platform once it's launched, right? So just do this kind of research, right? Then you'll be better informed. And next, moving on, China. So China, yesterday we talked about their, considering banning crypto mining, but as I've said already in yesterday's video, it is not all bad, right? And it is definitely not the end of the world. Today, there's interesting news in CoinDesk that said actually there are a few funds in China that are actually offering crypto lending, and this is really good because Bitcoin Capital, FBG, and Dongzhao's D Group, what they do is that they allow people who have crypto a way to actually get some liquidity. So what they're offering is they are giving you in USD Tether or in USD dollars, right? If you park your crypto holdings, crypto that you don't plan to sell, that you are hodling, right? With them, then basically you need to, so you put up your the cryptocurrency that you are hodling as a collateral with these firms, right? And then they will give you the liquidity that you need. So a lot of their customers are crypto miners. That's why no wonder still a lot of crypto miners can survive until today. And we need crypto miners to ensure, right, that the protocol or the record is kept up to date, and decentralized. So this is a good glimpse into what China is doing. It's also very similar to the rest of the world, especially US, right? Where these kind of practices are already taking place. And in US, even they've actually gone one step further to actually offering deposit as well, yeah? Now, although I have my reservation about deposits, but the lending part, I think, if you believe them, right, of course, then it makes sense. And of course, also there's also not much choice. If for people who need liquidity, many of them are cryptocurrency miners and hedge funds. They need the liquidity and they have cryptocurrency that they do not want to sell yet, given such a low prices now, that it makes sense that to park it with a reputable firm, right, and then they can get the liquidity that they want, right? Of course, for all that convenience, for all the additional liquidity, they have to pay about 7 to 12% in interest. And for these companies, why they want to take on such risk is because they are actually, for example, they for $100 of loans that they are giving out, they require $70 worth of collateral. And every time it drops very low, right, if the prices of the crypto drop to, let's say, $78, then they will start to either you top up your collateral or they will auto liquidate your cryptocurrency that you have with them, and then they are fine. So to the liquidity providers in this case, which is the crypto funds like Bitcoin Capital, FBG, and Dongzhao's D Group, there's really very little risk. And of course, they're also giving a very good solution for the crypto miners and hedge funds who need the liquidity, right? So in this kind of bear market, if you can foresee what is the problem you're trying to solve, you can also make money, right? That is what we are seeing here. Last, right, but not least, this is the second last one, is that Michigan House of Representatives votes to include cryptocurrencies in criminal laws. So this is interesting because this is just yesterday's news that they are including, right, that they are including cryptocurrency in their provision in their law, right, that related to criminal finance. Then they also prohibit the collection of cryptocurrency for the fighting, baiting, or shooting of an animal. So this is very interesting. The way I see this is basically that we have reached a point where people are already using cryptocurrencies, although it's not even in the super mainstream yet, but people who are using it are really using it for their daily activities. And there have been cases where people are actually using cryptocurrencies to bet on dog fighting, and that is why, because of that incident, and at that time, cryptocurrencies is not included in the criminal law, they couldn't prosecute the participant who participate in the dog fighting, which is illegal. So now that they see that it is inevitable that cryptocurrency is going to be used, right, as a parallel currency, so they need to change their laws to accommodate cryptocurrencies. Now this is huge because whether government like it or not, a movement is already taking place, yeah. And then this just says volumes again about the future potential of cryptocurrencies. Yeah. Last one is a UBS advert that actually shows that, right, 76% of investors in Germany believe that they will live to 100 years of age, right? And in Hong Kong, also 60% of the people believe that. Mexico, about 65% of people believe that they will live to 100. The key point of the question and to us is that, do you think these people are financially prepared when they live to 100 years of age, right? Many of them are depending on pension funds only, and I think the minority of them will have their own savings, will have their own properties, will have their own investments. But I believe majority of these people who believe they live to 100, I believe a lot of them are actually depending on pension. Now, with the honestly, with the inflation happening year on year, right? With our fiat money decreasing in value because of so much rapid printing, and with the rapid aging of the population, that basically contribution, cannot keep pace with basically the withdrawal of the pensioners, right? And if the pension funds continue to just doing what they do, that means if they continue to invest in traditional assets, right, which returns continue to be dismal, will they really have enough to actually meet these demands of the investors when they reach 100 of age? Will they have enough? So that is the key question, right? And I think it was in yesterday's episode as well, we talked about this, or in the day before. Basically then, so far, we have one pension fund in the US started to invest a small percentage of their fund in crypto. And for now, they are just investing in crypto-related companies, but that fund have the mandate to invest up to 15% of their money directly into crypto. And they are very smart because they do see why? Because they do see that crypto offers a uncorrelated asset. So basically, it will protect, and in fact, it will enhance overall returns. And it is the very asymmetric risk reward that actually make them come in. So, if you are pensioner, if you are one of those people living in these developed countries, and if you have always been relying on the government pension funds or even private pension funds, you really ought to ask yourself the questions, right? Are those pension funds well equipped to cover you up to 100 years of age? Or if you are very, health conscious, you might live even above, beyond 100 years of age. So, will you have enough? That is the question, I will leave you at today. Yeah. And with that, I hope you're having an amazing day ahead. For all my new subscribers, I truly thank you, and, can't describe my appreciation from the deep bottom part of my heart, right? And thank you so much for your time, and live with passion and high energy. Thank you so much for your time.